Hey guys, another crazy day in the stock market these days. Just a week ago, Elon Musk was saying use Signal and Signal stock. That had nothing to do with Signal, jumped up. Now he just makes one word tweet, Gamestonks, and GameStop goes up by like 40 points or so in the after hours. So I'm going to talk about the GameStop short squeeze. With GameStop going through the roof, some hedge funds are in big trouble. Melvin Capital just needed a cash infusion from Citadel. So I'm going to talk about things like this that happened in the past, like long-term capital management when they blew up, and the famous Volkswagen short squeeze with Porsche that sent the stock almost to $1,000 a share. How are they similar to GameStop, and what can we learn from these two incidents? During normal times, the stock market and investing is supposed to be boring. You buy safe, low PE stocks that pay dividends and just watch them grow over time. You don't look at it every 5 minutes. But now people are bored of that because we're in the bubble phase. So they don't care about earnings. They don't care about this company is raising their dividend by 2%. They don't care that this company has a little bit lower PE than the S&P 500. They care about not even price to sales or anything like that, not even sales or any earnings. They care about the story. What's hot? Electric cars. Okay, buy Tesla. It's up 100%. Okay, too expensive. Go buy the next cheapest Chinese stock, or go buy some company that just came out in a SPAC that doesn't even have a car yet or any revenue, let alone earnings. And even that has gotten boring. So people now don't want to know about stocks that might go up 50 or 100% in a year. They want that in a day or an hour. And so this is why people are migrating to penny stocks, really cheap for fractions of a penny, that if they go up to 3 cents, they made 500%. Or these stocks that have high short interest like GameStop and a bunch of others that they can try to squeeze and have these big percentage gains in a day, because that's what this market has become, just gambling how quick you can get a high percent on your money. So GameStop went up $44 after hours after Elon Musk tweeted Gamestonk. And here's the chart of GameStop in the after hours. It went almost to $250 after that Elon tweet. A lot of people on Wallstreetbets are comparing GameStop to what happened to Volkswagen, where hedge funds lost $30 billion in this short squeeze. And so they're hoping the same kind of thing happens with GameStop that happened with Volkswagen. And just to be brief, what happened was Porsche already owned a portion of Volkswagen, and they purchased cash-settled derivatives that would bring up their stake to over 74%. And a lot of hedge funds were already shorting Volkswagen during the financial crisis because all the car makers were doing bad and were needing bailouts. So everybody was on one side of the trade because they thought it was an easy, no-brainer kind of trade. And they didn't realize there was a lot less stock out there than they thought. So before October 2008, Porsche owned 30% of Volkswagen. The government of Lower Saxony owned 20%, and about 5% was owned by various index funds because of Volkswagen's weighting in the DAX. So that means about 55% of the Volkswagen shares were already unavailable by October 2008, and Porsche added an additional 44%, which takes them total up to 99% of the float spoken for. So that 12.8% short interest, there was only 1% of shares outstanding. And so Porsche decided to make an announcement after it became clear that there are far more short positions in the market than expected, and that pretty much scared everybody, and everybody tried to cover, and this thing went to almost $1,000. And the hedge funds who lost a whole bunch of money were mostly American hedge funds like David Einhorn, Paul Singer, and Stephen Cohen of SAC Capital at the time, who lost $250 million in just 1 week on Volkswagen. And who's bailing out Melvin Capital right now? Citadel and Steve Cohen, coincidentally. So this is the kind of thing that could happen on Wall Street when everybody is in groupthink and is on the same side of the trade. It doesn't take a lot for them to all get squeezed out of it. And that's kind of what happened in long-term capital management. So in a nutshell, it was filled with really smart geniuses and Nobel Prize winners. And what they were doing was shorting one kind of bond and getting long another kind of bond in the hopes that they would eventually reach parity because one was overpriced and one was underpriced. And there wasn't a lot of money to be made in this. And so they leveraged up their money something like 25 times. So 25 to 1 leverage, and things started going wrong. And more than that is that they were trying to be secretive about their positions because their positions were so big that they were the whole market in some of these cases. So they were trying to be very quiet about who knew what their positions were, because people can kind of force the trade to go against them and kind of squeeze them out, kind of like a short squeeze. So the example in the book that they gave is that if an insurance company sells hurricane insurance, whether they sell one policy or 1 million policies, it doesn't make the probability of a hurricane any greater. That is not the case on Wall Street. The more insurance you sell, the more likelihood you will get a hurricane. What that means is the bigger the position a firm takes on one side of a trade, the more likelihood that other investors that find out about it are going to try to take the other side of the trade to cause you big losses, which will cause them big gains. And that's kind of what's happening in GameStop. So an example of your competitor turning the screws is Elon Musk doing this tweet saying Gamestonk. Now that in itself made GameStop go up $44. And why did he do that? And it's not because he's bored and nobody's giving love to Tesla these days. It's because of this. Melvin Capital, which just got that bailout from Citadel and Steve Cohen, has been a big shorter of Tesla in the past. Okay, so this is their position, all these puts that they've owned since 2014, 15, and 16. And so Elon Musk was always talking bad about the short sellers in his stock, and he really hated them. And so now he smells blood in the water with Melvin Capital, and so he sees the opportunity to turn the screws on them and cause them even more pain, which he did with just one text, which is pretty epic in my opinion. So what's going to happen with GameStop? I don't know, but firms like Melvin Capital that got that bailout, $2.7 billion from Citadel and Steve Cohen, that was around $70 a share. GameStop closed at 144 or something and was as high as almost 250 in after hours. So if Melvin hasn't covered by now, they're going to need a lot more money, as well as probably a lot of other hedge funds are getting killed on this, and other market makers as well, who were shorting calls as people were buying deep out of the money calls. And now these calls are in the money and they're getting squeezed because they have to buy back the stock. And so that's just adding to the short squeeze. So is GameStop a company that's going to have a turnaround because their stock price is so high? GameStop is kind of like Blockbuster Video, but for video games. So their future is not that bright. However, with this stock price up here, this is kind of like a GoFundMe for GameStop. They should just do a whole secondary offering and sell 10 million shares or something. That'll give some relief to the short sellers, and that'll give them a whole lot of money. You know, make hay while the sun shines. So if I was them, I would do that. I don't know if they're going to do that. But I know the question everybody is thinking and wants to know is, should I buy GameStop? Should I buy calls? Should I buy puts? Should I short it? My answer for that is, that's up to you. I would not touch the thing. It's so volatile. It's so crazy. I see people on Wallstreetbets putting their whole life savings into it. It's kind of like flipping a coin. You're either going to make 5 times your money or lose it all. So if that's the kind of gambling you want to do, go right ahead, or go to a casino or something. But it's stocks like this and events like this and things happening in the market like this that just really show you how crazy the market's gotten. And I gotta believe that we're somewhere very close to a top. So I know everybody has the fever to get in this thing and get rich and think it's going to go to $1,000 like Volkswagen, but more likely a lot of people are going to lose a lot of money on this, and they're not going to be the ones bragging on Wallstreetbets or whatever, because when you lose money, you usually don't feel like bragging about it. If you want to know what happens in the popular delusions and madness of crowds, read this book by Charles Mackay, Extraordinary Popular Delusions and the Madness of Crowds. And this is one of my favorite quotes. Men, it has been well said, think in herds. It will be seen that they go mad in herds, while they only recover their senses slowly, one by one. So when people get all hyped up about stocks like these in these short squeezes, or just any euphoria in this bubble, they believe there's safety in crowds, and that if everybody's doing it, it's got to be okay. And so it's okay to put all their money in this risky gambling type of stock short squeeze, or whatever, penny stock or anything like that. But they only come to their senses eventually by themselves. And that's usually when they take their loss and say, what the hell was I thinking? And then just be quiet about it and try not to think about it again. So guys, make your own decisions. Don't follow the herd in these forums that say, oh, put all your money in and you're going to triple it tomorrow. We're going to squeeze these hedge funds or whatever. Yeah, the hedge funds may get squeezed. They may lose money, but they're losing other people's money. You may lose your own money. So be careful with it. I hope you liked this video. I'll see you in the next one, and let's see what happens on GameStop tomorrow.